Hello, and thank you for joining us today. I'm Taylor Combalusier, a mining analyst at Red Cloud Securities. Today's webinar features Aeris Resources Limited. Aeris Resources is a mid-tier base and precious metals producer that has a portfolio that includes 3 operating assets and 1 development project, all located in Australia. Recently, the company has successfully extended the life of mine at its Cornerstone Tritton copper operations. Its other operating assets include the Krakow gold operations, as well as the North Queensland copper operations where production is currently wrapping up. Aeris also owns the Stockman Copper Zinc project, which is an advanced development project 300 kilometers northeast of Melbourne that has a 10-year life of mine and all primary approvals. A DFS is expected for the project in 2025. It also owns the Jaguar Zinc and copper operations, which are currently on care and maintenance. Today I have with me on the webinar André Labuschagne, who's Executive Chairman at Aeris Resources. The format of today's webinar will be comprised of 2 parts. In the first, André will provide an update on Aeris Resources, and then in the second, we'll take your questions live. So please send us your questions using the chat, and we'll get to as many as we can. You can type in your questions at any point throughout the presentation. To start, I'll handle the disclosures and then turn it over to André. So for Aeris Resources, there may be some forward-looking statements made on this call. I would direct listeners to the cautionary note on page 2 of the corporate presentation located on the company's website. For Red Cloud Securities Inc., I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. And we note that this call does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for Aeris Resources specific disclosures. So with that out of the way, I'll turn it over to André to update you on the company and what you have to look forward to.
Thank you, Tyler. Appreciate it. And good morning or good afternoon, everyone. I appreciate you taking time to listen to the Aeris presentation. I'll just go to the intro slide. I guess just a bit of background about Aeris for those who hasn't followed us. We're an Australian-based company. And over the last, I've been involved now with the business for just on 11 years. And in the last 4 years, we've actually started to grow the business significantly. So up to about 4 years ago, we only had the Tritton copper mine in New South Wales. Tritton do about 23,000 tons of copper is roughly our guidance for FY25. We'll talk a bit more in detail about it, but that's sort of where Tritton is. Krakow, we bought 4 years ago. So we started to grow the business. We bought it 4 years ago. It's a gold mine, doing about 45,000 ounces of gold, and has been doing that consistently over the last 4 years since we acquired the asset. In North Queensland, we own the Mount Colin copper mine. That will wrap up in the next 2 weeks, but then there's another project which we'll talk about, which is called Barbara, which is a potential new start in the exact same format as we've done the Mount Colin mine. As part of an acquisition we made 2 years ago, which included the North Queensland assets, the Jaguar copper zinc mine, and the Stockman project in Victoria. The Jaguar mine was in production at the time, and after 12 months of owning the asset, as a result of a significant drop in zinc price, but also capital required to get life in the project, we actually decided to put the mine into care and maintenance 12 months ago. And then the main reason why we bought those assets at the time was for the Stockman project, which is quite a large copper zinc project. It's got a 12-year reserve position, and we're busy with that feasibility study. So for our calendar years, which runs from July to June, we're forecasting around 30,000 tons of copper, around 55,000 ounces of gold, and 220,000 ounces of silver for the financial year. So the 3 operating mines all got potential to extend. The development projects we're working up, and as we move the company forward, we believe there's a good platform to grow this business to around 50,000 tons of copper over the next 3 to 5 years. And that's really the aim we're trying to drive in the business. Touching on the corporate overview, current market cap around $180 million. you can see there we have got some debt, the $40 million. That is with our major shareholder, Washington Soul Patterson, who is the group we bought these last 3 assets from 2 years ago. Fairly small board, and the executive team, we have made some changes in the last 3 months, 6 months, bringing in a new COO, Paul Harris. Ian Shepherd, who was a COO, has taken over the technical role, specifically trying with the aim to deliver these projects as we move forward. Might just touch on the share price and the market cap. So what over the last 2 years, before we put the Jaguar mine into care and maintenance, the share price was running at about 75 cents. And at the time we decided to put the mine into care and maintenance, we also put the debt in place to make sure we can have controlled closure of the mine. And that sort of resulted in the share price where it sits today. It is improving, and you can see that share price very closely follow the Australian dollar copper price as the price go up and down. So the company is fairly sensitive to the movement in copper and commodity prices. This is a busy slide, so I'm not spending too much time on it, but really where the focus for us is basically in the line which you can see 820,000 tons of copper, million tons of zinc, and 1.4 million ounces of gold within our resource. But what is clear to us is the 3 key assets with long life and the potential to deliver on that copper strategy I was talking about earlier would be the Tritton copper mine, which within the next 2 to 3 years can get to 30,000 tons of copper. The Jaguar mine restart, which we'll make a decision on in the first half of calendar 25, can do about 10,000 tons of copper plus zinc, gold, and silver on top. And then the Stockman project, once that's up and running, will do about 15,000 tons of copper, also with zinc, gold, and silver as addition. So between those 3 assets, we can create this long life, 5 to 10 plus year mine life assets with reaching that 50,000 tons copper as a guideline for us going forward. While Cracow, although it's a gold mine at 45,000 ounces and this current gold price, it does generate good cash, which we believe is the enabler to develop this copper strategy we're trying to focus on. Just touching on the different assets. So this is the Tritton process facility in that photo. It's a 1.8 million ton process plant. What clearly is at Tritton, we would mine 3 to 4 mines, between 2 and 4 mines, put it that way, at any time. So currently we're mining the Tritton underground mine, the Budgerygar underground mine, Avoca Tank, and Murrawombie. Now, all 4 of those assets then gets trucked to the Tritton process plant and is delivering the 23,000 tons of copper. We have made a clear decision on investment over the last 2 years where we brought into production the Avoca Tank and Budgerygar assets. And that was all driven with a focus to improve the grade going into the process plant. So 2 years ago, we would have processed grades of around 1.1, 1.2% copper. Right now, with those better grades, you can see Avoca Tank sitting at 3.4% copper. We're processing closer to 1.8% copper. And all of that is this drive to get the production up. And then where the clear future sit for Tritton is Constellation. You can see on the top right there, that's a new discovery. We discovered the deposit about 3 years ago. We're busy drilling that out to an indicated resource, all with the aim to bring it into production within the next 2 years. This is sort of the path, what we see creating that 30,000 ton producer with an 8+ year mine life. So currently we're mining those 4 assets. We will start in Murrawombie open pit in the next 2 months. And then that will lead into the start of Constellation. And then we got other assets going in the future. But every one of these new assets we're bringing in is coming in at better grades than what we're currently mining for example, at the Tritton underground mine. When you look, this is just a snapshot of the Murrawombie pit. As I said, that's starting in the next few months. It is clearly just a cutback. It will do about 1.3 million tons at 1.3% copper, but it will be done, it will be delivered in a very short space of time. So we'll start in February. By May, June, we'll start to get ore into the process plant, and it will be for about 12 months. One of the big benefits of this is, if you look at that photo on the right-hand side, although it's not that clear, there's quite a large historical heap leach pad sitting to the right. Now, the waste we're going to mine from this will close those heap leach pads, and that will save us about $8 million in itself as a rehabilitation cost as we close those heap leach pads going forward. This is a Constellation deposit. It's a deposit we discovered. It literally starts on surface. It's already 7 million tons at close to 2% copper. It's still open at depth. Right now, we're targeting to convert the first 250 meters to indicated resource. So we get the quality up, we can put a reserve around it, and then make sure that we put a feasibility study out by June next year. And then that mine will come into production within the next 18 months to 2 years. This is an image of the Krakow gold mine. Very different. It's a very well looked after plant. We bought it from Evolution 4 years ago now. The mine the plant process facility do about 400 to 500,000 tons. And it all currently been mined out of this Western Vein field, if you see on that image. Unfortunately, it's one of those mines who's never got a long reserve life, but has always been able to replace what we've mined. So currently, with the benefit of a good gold price and the cash we're generating, we are really focusing on what else are there outside that Western Vein field. Now, the two focus areas for us clearly is, if you look at this image, that's the Western Vein field. There's new target areas outside the Western Vein field. But the real opportunity is that Western Frontier, which is a new structure which has been identified. We're busy doing the geological work around it, and some target generation to do some holes in there. Now, that potentially can be a repeat. A discovery there can be a real addition to the value of the business as we move forward. So clearly, we're trying to step out of just trying to replace what we mine within the current Western Vein field. One of the real opportunities is the Southern Vein field. On that image, you can see all of the Western Vein field and even the Eastern Vein field trend towards the south. Hasn't been tested. That area which is highlighted there has been worked on, and then we believe if you find something there, and if you find those ore bodies extended to the south, there's a great opportunity for it to be a game changer for the business as we move forward. North Queensland. So this is the copper mine in Queensland. Now, the photo there is the Mount Colin mine. It is a full footprint, so it doesn't have a process plant. It doesn't have a tailings dam. It's really just we mine it, we truck it to one of our neighboring mines, which is Ernest Henry or Mount Isa. They process it and we get paid. So this mine will finish off in the next 2 weeks. And then the final process runs will be in January, February. We will start the rehabilitation process for this. But it clearly, as you can see there, we're just taking those last stumps out. And then the real opportunity then becomes the Barbara project. So Barbara is similar to Mount Colin. It was mined as an open pit mine before. There's about 2.2 million tons at 2% copper with gold. The aim there would be to do exactly what we did at Mount Colin. Previously, it was processed at the Mount Isa copper mine, and we will do the same. So the idea is to basically move the facilities from Mount Colin to Barbara and restart that as another small underground. We are finishing off the feasibility study on this in the next few weeks. We will take it to the board, but there is a discussion internally about it's another small short life mine. Is that the best capital allocation for us at this point in time? And that's a discussion we're having. So there's you could call it a strategic review if you want to, about those assets in North Queensland and the value driver of targeting this 50,000 tonnes copper with long life assets. The other development projects, that image you see there is the current portal of the north, the Jaguar mine in Western Australia. Now, the Jaguar mine, when we close it down, you can see that image on the top right. We were mining towards the bottom of the mine, but clearly I had to get infrastructure in to mine the Turbo deposit, which was further down the bottom. And at the time, as I said earlier, zinc price dropped. And as we would have developed down to Turbo, production would have halved as well. And that put pressure on the cash and cash management. So the best decision for us at the time was, let's close it down and reset the business. So what we are doing on a study now is a restart of Bentley to get into the Turbo deposit at the bottom. But also, if you look at that image, over that 7-kilometer stretch, there's 4 other deposits which you can potentially bring into the production pipeline, which was not part of the plan before. So currently we're looking at starting up Bentley, get into the Jaguar underground mine, mining to Tony Bourne, Triumph, and then there's quite a big exploration opportunity for base metals in the region. One of the big option values we have here is, if you look at the tenement holding on the north and south, we got 2 good big gold miners, and on the tenement itself, there's really exceptional gold targets, which is an option value. If you find a gold deposit on those tenements, the gold miners will be very interested to talk to you about the gold associated on those tenements. So clearly the JAG restart, the scenarios has been run. We actually presented an update to the board yesterday. There will be another update in February with a decision on a restart around this first or second quarter in calendar year 25. On the Stockman is our project in Victoria. This is my reason why we bought those assets at the time from Washington Soul Patterson. It has got a 12-year reserve life on it. We will mine about 850,000 tonnes from one mine, the Currawong mine, as you can see in that image. The image on top, the photo, is the tailings dam, which is a historical tailings dam, which we got approval to reuse. Most of all the major approvals is in place. But one thing we identified at the time we bought the asset was the technology opportunity, application of technology to improve the recoveries. The feasibility study as we bought it or inherited it was calling for 75% recovery for copper, 68% for zinc, 30-something% for gold, and 20-something for copper, for silver. Now, the Albion process is a technology which has been used all over the world. The test work we've done to improve those recoveries using an Albion technology has basically put the copper and zinc recoveries to above 92%, doubled gold and doubled silver. So huge opportunity to improve the recoveries. The test work we're doing right now is to test the recoveries across that ore body, but also looking at finalizing cost and capital associated with the Albion process. The aim is to have a feasibility study update towards the middle of calendar year 25. We believe it's a great project. Once it's up and running, it will have a 20-year mine life. But clearly for us is the technology in this case is where the real value driver will come to add significant value to the bottom line or to the process of Stockman. I guess that sort of summarize it, Taylor. 3 opportunities basically for 3 projects, by the Barbara, Jag, and Stockman. All the mines, I keep on saying to people, when I joined this company, Tritton had 4 years life. Today, 10 years later, we're saying Tritton has got 8 years life. So it's just one of those assets The same, we bought Krakow. When we bought it, we know it had 2 years life, and we thought there's four. 4 years later, we know there's 3 in front of us, and we know there's more. So it really just some of those assets which continues to grow, and driving that strategy of 50,000 tons copper, clearly take those bigger projects into account with longer life and focus on copper.
Perfect. Thank you very much, Andre. Great presentation. So now we'll turn to the Q&A portion of the webinar. Just a reminder to everybody on the line that you can type your questions into the chat box at any point. So that said, we have a couple that have come in. Maybe the first one that we'll start with is just kind of a bigger kind of macro outlook here. Given that a physical copper deficit is looming, BHP forecasts a deficit of 10 million tons by 2035. Would Aeris consider slowing the Stockman project, apply cash flow to balance sheet repair, and then hit the project hard and fast as we can confirm the real size of the deficit, is the question.
Peter, yeah, look, I think that sort of, we all see the deficit coming. The size of the deficit is moving around a bit between different forecasters. The Stockman project is still at least 18 months, 2 years from actually getting to a point where you can get it in production and keep going. We are looking at refinancing our debt position. We are looking at how do we improve the balance sheet using the cash we're generating from the operations and other opportunities. And you're right, by the time Stockman is ready to go, then you will push it hard and get it in. Because the real value, with these things, I always say you want to be in production when the price run. You don't want to be starting to build stuff. We know these cycles goes up and down, so it's really, and that's always been our view on Tritton. You've got to be in production to take the value opportunity when price starts to move, and I think Stockman will be similar. You've got to get the timing right, but you don't want to start to build it when the price is already at levels where you can get a lot of value for it.
Great. Okay. And kind of a related question, I guess, here, just maybe diving into the financing aspect a little bit for the company. Are you looking for any financing? If so, any kind, like equity, royalty, debt, JV?
So look, there's various ways we look at it. So currently we are refinancing that $40 million in debt and also our bonding facilities with the governments. That process should be finished by sort of January, February. When you look at some of the bigger project startups like Stockman will be a large scale project. We would look at because it's got a 12-year reserve position, you could put a decent debt piece around it. But also, we would be looking at joint venture partners or partners to come in. There's people out there who's looking for offtake who wants to be part of the process. And once we get it all to a point where it makes sense and the feasibility study done, we will start to look at those different options on recapitalizing, or not recapitalizing, but really get the funding in place for something like Stockman. The other assets like the Jaguar mine has got offtake available, so normally you go and get some offtake funding, which will help to start the project as you move forward.
Perfect. Okay. Yeah. So I like during the presentation, a lot of obviously discussion and work right now is on the internal projects you have, whether it's economic studies, restart studies, etc. How are you balancing that with looking at outside opportunities, M&A and stuff? Is that something that's what's your view on that right now?
Look, we always look for opportunities. There's within, for those who know the region, within the Tritton mine regional, there's a lot of opportunities to consolidate some of the copper exploration assets. If you make Tritton the process facility of choice in the region for copper, we always look for opportunities to improve the position and also the quality of the assets in the business. Now, in the Australian market, there's not a lot of mid-sized copper producers for the investors to invest in. And I do believe that when you step back from all of that, there's a few smaller copper players around. At some point, I do believe there's opportunity to create a substantial copper combination for investors to invest in. So we're always looking. We have, as I said, over the last 4 years, grown from 1 mine to 4 mines, and with all these projects. But clearly, if there's opportunities outside of our own internal growth, we'll always have a look, as long as it makes sense.
Mm-hmm. Okay. So basically the strategy is that internal growth while keeping an eye on kind of external opportunities, right?
Correct.
Okay.
Correct.
How are things looking right now in Australia in terms of inflation and impacts on operations and kind of the economic outlook, in comparison to how the US is performing right now, and how will that affect Aeris?
Look, I think from what we've seen over the last, let's call it 2 years, the cost inflationary environment has settled down significantly. We've seen one of the biggest cost increases we had was our power bills, for consumption of electricity. That has settled down. The workforce market drivers has settled down as well. So I think overall we got a much better handle on where costs are going, inflationary and others, and it's easier to manage. That combined, of course, with Aussie dollar sitting at 65 cents or 64 cents. As a Aussie dollar gold price, we get $4,100 an ounce, and copper price sitting at around nearly $14,000 a ton. So all of that, I think, does help our position from a commodity price point of view, while I do believe there's a lot better control over the cost side in the last 2 years. We've seen significant increases after COVID, but now I think it's a lot better, and you can forecast pricing and manage things a lot better.
Perfect. Okay. And then I'm just going to take a look at the questions here. Maybe I'll put out a call to the audience. If you have any other final questions, just enter them in the chat now. While we wait for that, maybe just sum up and outline the key catalysts that investors have to look forward to. I know going through the presentation, there's a lot at each asset, but kind of what are what's the sequencing in the next few months here that investors should be watching?
So the key things we're working on over let's call it the next 6 months, will obviously be the Constellation drilling. That will come out with a resource update in the March quarter, which will then lead into a feasibility study in the June quarter. That really drives the value for Triton. We also at Cracow started to test these other bigger areas, and as we get success or not, we'll obviously update the market on that. A decision on the restart of Barbara or the strategic review of Barbara, I think that we get I get a lot of comments from investors and shareholders. Your company looks very busy and there's a lot happening. And as part of this strategy we're rolling out of trying to get to 50,000 tons within the next 3 to 5 years, and have assets with more than 5 or 10 years life, the North Queensland assets probably doesn't fit. So we'll try to simplify the business as well as part of the process. The other things we can look out for is the Jaguar update in the March quarter, and a decision on a restart or not on Jag. So far, it's looked very promising, and I think the Jag restart will go a long way to start that process of creating this copper asset or copper business.
Great. Okay, so just going back to North Queensland and with the Barbara feasibility study and investment decision. So essentially, either way, depending on what decision you make, you'll still have that at the end of the day if you decide not to make that investment, and it'll be nicely packaged up if you were to divest it. Is that the
That's right. That's right. So there will be a feasibility study on Barbara. So you know the value. There's a good exploration package to it. But really for us is, the question for the board becomes, or for us become, do I put $40 or $50 million in a short life copper business, or do I put $40 or $50 million in a long life copper business? The answer is pretty simple, especially if you can get a bit of value out of the sales process. So that's sort of how we looking at it.
Perfect. Okay. I don't see any other questions that have come in, so I think we'll leave it there. So I would like to thank André from Aeris Resources for taking the time today to host the webinar with Red Cloud Securities, and thank you for everybody on the line for tuning in with us today.
Thank you, everyone. Appreciate your time.